What's up, everybody? My name is Wallo, and I'm the professional fact spitter and certified gem dropper. And welcome to another episode on Game Plan TV. First off, to get things kicked off, I'm not a financial advisor, like I said, professional gem dropper, certified fact spitter. You know what I'm saying? And we're here to do some world class dot connecting once again. It's late at night. I don't know, for some reason, I like recording these things really late at night. Doesn't make sense. But today's episode, I'm gonna show you. I'm basically gonna show you guys how the media, the big boys, the media big boys, how they manipulate investors, us retail investors, into making bad decisions with some of the reports that come out. Right. So I'm gonna show you a little bit of the stuff at what happened during the 27 bull run when Bitcoin just had that absolute monster run all the way up to just below 20,000. We went up to about 19,550 from $750, which is crazy, 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 right? And I just want to show you guys just a little bit of the manipulation that actually goes on within these markets. And all these sources are from, all the sources I'm going to show you are either from Forbes, from CNBC, from Bloomberg, or The Guardian, right? These are all the big financial news outlets that get the news out to us, and then us as retail investors, we try to get in on this news to make sound investment decisions, right? And meanwhile, majority of the time, these guys are just playing with us, right? And I've been sitting today, like, just looking at different news and wondering to myself, like, what the hell? Like, these guys actually manipulate us. You know what I'm saying? If we take a look during this bull run, and it's always China. That's another thing I also noticed. Always China. You'll see as we go through some of this stuff. But the Bank of China recently announced that it was cracking down on Bitcoin trading. This was in the 2017 run, when it's just early in the run on March 17th, and then here they actually cracked down on March 18th. And straight after that, we went on this monster run to the upside. Let's just measure this and see what we did. So after this, all this announcement, and this is coming out from CNBC, all the big news outlets are letting people know what's going on, right? And we had a 234% rise straight after that. So this is why I think a lot of the big institutions, a lot of the hedge funds are actually in bed with these large media outlet companies in order to feed you certain information, right? So that you as a retail decision do the opposite. Remember, if they're buying, they need to be buying from someone. And who would they buy from? They would buy from retailers, the suckers, which is us, because we don't have this inside information, right? They have it. So they can create everything that they want to create and create this facade in order for us to make bad investment decisions, and then they get this run up again. If we take a look, July 2016, there were articles about the ICO craze that was happening, the initial coin offering um, uh, uh, craze that was happening, right? And this was at $1,844. And after that, we had another run up, almost another 100% run up. Look at that, 160% to the upside, right? And then when Bitcoin starts tanking again, that's when we get all the negative news outlets. So it's almost as if hedge funds want you to stay away when price is getting suppressed. But when price is running, really running, that's when articles about these outrageous valuations for future valuations for Bitcoin start coming out. But as long as it's almost as if, as long as the article headlines that are coming out from all these big boys, Bloomberg, CNBC, who else? Financial Times, The Guardian, Yahoo. When these guys just post negative information, it's almost as if they want you to stay away so that they can accumulate more, right? And this is something that I think we should pay attention to as investors. It doesn't matter what you're investing in, right? And once again, this is not financial advice. This is just professional gem dropping, certified facts bidding, and world class dot connecting, right? We are not about, we need to pay a little bit more attention to media influence, right? And how these big companies have a large influence on our investment decisions, the way we think. Because you have to think, a lot of these people put out the material that we're supposed to learn from with regards to analyzing charts or approaching any type of market, right? So they know what to do. Because at the end of the day, there's a buyer and a seller. There's a winner, there's a loser, there's a bull, there's a bear, right? And we want to be on the side that is favorable to us. And so do the hedge funds, but somebody needs to buy from someone. If you buy, somebody needs to sell from you, sell to you, right? And vice versa. So if we take a look at just stuff that happened further, once Bitcoin was now at those outrageous prices in and around the 14,000s, to that all-time high of 19,000. Look at the articles that came out that were starting to come out were these hectic valuations, right? Analysts who predicted Bitcoin's rise now sees it hitting 300,000 to 400,000. That came out by CNBC, right? And it came out on 16th of December 2017. A few days earlier on, Chicago-based CFTC company, I actually made a typo there, were planning to launch Bitcoin futures on Sunday. And on that same article, they had another valuation from an asset manager, from an analyst rather, saying that Bitcoin could hit $1 million. And this analyst actually came, or this source came from Coinbase, which is one of the biggest exchanges in the States. And Coinbase is very big and very selective of the type of cryptocurrencies that they have on their platform. So this was seen almost as a trusted source. But Coinbase, for some reason, right, I don't think this is coincidence, but they always freeze whenever the market goes into a hectic bull run. When they start running, Coinbase just decides now we're going to go offline. It's almost as if they don't even want retail in, right? And this all happened when we had these crazy valuations. This happened, and then that's when the market decided, okay, we're done. The big hedge funds were basically dumping on you while releasing all this data to us, the retail traders, the suckers, right? Bitcoin's going to 300,000, 400,000. Let's buy it. Let's buy all at highs. Let's buy these highs. The Chicago futures are launching and Bitcoin's possibly going to $1 million. Let's buy it, right? But earlier on, when it was down here at much better prices for you to actually get in, when it actually makes sense, all the articles were negative, right? And this was in the Bitcoin 2017 bull run. And then after that, I didn't put everything in here, but basically what happened here was just negative news. Stay away from Bitcoin. That's what was happening. Stay away from Bitcoin. You can go and take a look at all the different articles that have been posted within this area. It was stay away from Bitcoin. Bitcoin's going to zero. It was just bad. It was a tough bear market, right? And then the market all of a sudden started to run up again, right? I have skipped a number of things. Probably got crazy bullish news from CNBC in and around this area. And then we had the COVID crash to all the way in and around to where $4,000, $3,000. And then we had this massive run up to the upside that was just running with the stock market, and gold as well. Right? So we get this crazy, 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 crazy run up. And now I'm just going to switch to the 4-hour chart. And sorry, guys. Oof. Okay. So now if we take a look and a closer look at what's happening, right? And do some dot connecting. I just want to make the screen a little bit better so that for you guys to see and read. Okay. Cool. When Bitcoin was making these stupid runs to the upside, right? And this all affects the altcoin markets. I'm not invested in Bitcoin. I don't own any Bitcoin. This is not financial advice. But Bitcoin leads the crypto market in its entirety, right? So when you're looking at charts, especially crypto charts, you do need to look at Bitcoin charts because it leads the market and then flows into Ethereum and then all the other alts, right? But we had these crazy valuations that were coming out. So once we're at these highs, Bitcoin's trading at $58,000, $64,000. But look at the news. Look at the news from the hedge funds, right? They now want retail to continue buying because they're preparing to dump on us, which means they're preparing to sell. They did the same thing in 2017, and in this area, they're doing the same thing. Coinbase direct listing set for 14 April 2017 approval. 2021 SEC approval, right? Market goes, and the markets were in and around this 59,000 price range. Okay, following a couple of days later, we have more bullish news. Bitcoin price prediction: why Bitcoin could rocket to $400,000 in 2021, and that's by Forbes, right? So they're encouraging retail to get in on this market, to load up as much as they can, so that they can dump on us. And then on the 14th of April, we had the Coinbase IPO, right? So Coinbase is one of the biggest exchanges in the states, and these guys listed their IPO, which means they had an initial price offering on the New York Stock Exchange. So now you can buy a company that helps you buy cryptocurrency and actually invest in their shares. And what did we get? We got a massive, massive, massive drop after that, right? We tanked all the way down to 27%, right? And then we had a little recovery. Once again, we need to pay attention to what is actually coming out, right? They were extremely bullish at the top with the information that they were releasing. If we take a look now, as the price is tanking, they get negative on news. When they get negative on news, this is now to ensure that the retail trader stays away and does not accumulate more Bitcoin while the big boys, the hedge funds, the institutions load up on more, right? So we had that crash after they dumped on us into highs, and then in May, on the 13th of May, Elon Musk announced that Tesla is no longer going to be accepting Bitcoin due to fossil fuel issues, that Bitcoin is using up too much energy in the mining and all those things, right? Bitcoin sees a huge tank, right? Then we get China on the 18th of May. Chinese banking and payment industry bodies issues a statement warning financial institutions not to conduct virtual currency. So this is what they do. They issue a warning first, and then they do it. They did the exact same thing in 2017. The exact same thing. They issued a warning, and then they did it. Right? So price tanks. So we've got Elon Musk, price tanks. We've got China, price tanks. Right? This is now where you need to be smart as an investor and actually pick up what is it that the market is trying to do, or what is it that the big boys are trying to do. Now we can go closer here. So now we had this massive, massive drop here. And this the biggest news that was trending at around let's get that date correct, but it was a couple days after China issued the warning on the 19th of May. So it's like basically the next day. China decide that they're going to ban financial and payment institutions from providing digital currency service. So they first warned you about it, and then a couple of days they decide, okay, no, we're actually going to do it, right? And prices tank. Now, as a retail investor, when you're reading headlines like this, you don't want to get into the asset class at discounted prices, right? Because you're getting all this negative information and you stay away. But this is where the institutions are loading, and they keep feeding this data to the media to keep you, the retail trader, away, right? We've had this long period of consolidation, but I've just been paying attention to news at the lows, at the major lows, as to what's happening. We had this tank here back into the low 30,000s, And one of the big articles or stories that was floating around was Bitcoin falls to 3-week low as the IRS, right, which is basically the tax regulatory body in the US, was looking for approval um, for reporting rules with regards to cryptocurrencies, right? So people want the exchanges to give their data over to the IRS so that they can tax people that are earning from cryptocurrencies, right? And that happens at the lows. Everyone's like, oh, hell no. And then what does price do? Climb to the top again. When we had these lows, from China's Bitcoin mining crackdown to um, investor Mark Cuban DeFi asset. So once again, China issue out a warning like, yo, we are gonna ban the miners. Remember, they went after the institutions. Now they're going after the miners. And then Mark Cuban's also on CNBC saying he got rug pulled and his DeFi investment crashed all the way to zero. So now they're just adding more uncertainty, more fear into the retail trader to keep them away, right? While they accumulate. If we take a look here at these lows, on June 26, the Financial Conduct Authority banned Binance, which is the biggest exchange in the world, from offering crypto derivatives in the UK. More, more fear, uncertainty, and doubt, right? Now, I'm not saying that Binance are 100% clean. All I'm doing is simply attaching news to where prices are and then monitoring what happens to price after that news is announced. And you can see what happens. Why would the price rise 20% after a negative announcement? Why? Why would the price rise 30% after a negative announcement? You know, these are the type of things that I think we need to pay a lot of attention to, right? They had all these massive valuations about Bitcoin getting to 300, $400,000, Coinbase IPO, and then the price tanks 27% and recovers, and then Elon Musk comes in with the negative data. So right now, what's currently happening, and I think this is something that I'm going to keep open for quite a while. If we take a look, the news that came out today was Senator Elizabeth Warren warned against the growing risks of the highly opaque and volatile cryptocurrency market. And she also sent a letter to the chairman of the Security Exchange Commission, the SEC, to basically give her answers with regards to regulatory clarity by the 28th of July. Right? So we need to pay attention. A lot of people feel like this isn't the best news. Some people do. If you're an XRP investor, this is what Ripple have been asking for the longest time. But the issue is Senator Elizabeth Warren is extremely against crypto. She does not like Bitcoin, and she thinks that it's a safe haven for criminal activity, right? Even though studies and numbers have shown that less than 3% or even 1%, if I'm not mistaken, but less than 3%, I can say with 100% confidence, is actually used for criminal activity. Whereas the US dollar within itself is used for way more criminal activity than Bitcoin is, right? So this is something that we need to sort of pay a little bit more attention to with regards to how the media actually manipulate the retail investor with regards to their investment decisions, when to buy, when to sell, um, and the overall approach to the investment game. It doesn't matter what asset class you're looking at, whether it's government bonds, whether it's equities, whether it's forex. I think a lot of the major media companies act and behave in such a way that they have a negative or adverse influence on the retail investor, such as yourself, such as myself. And we probably need to pay a little bit more attention to this so that we can make better entry price points with regards to our long-term holdings. If you're trading it, at least you can keep track of what the media is and maybe play the other side. But yeah, once again, this is not financial advice. My name is Wallo, professional dot connector, certified gem dropper, world class dot connector, and we'll see you on the next episode. I hope you guys enjoyed this one. Once again, hit that like, hit that subscribe. We got to mess with the algorithms. We got to get in there, change some shit up. Peace.